Mainstream economists are climbing off the ledge on the tariff wars, raising forecasts for growth, jobs, and inflation, pretty much the Goldilocks combination. This is all despite tariffs that were supposed to send us into hyperinflation, plus a Federal Reserve strangling the economy with some of the highest rates in 30 years, despite inflation running about 1% since Trump took office. The news comes from the Wall Street Journal, who surveys 69 mainstream economists every 3 months. The previous survey came in early April, so that was just after Trump's Liberation Day tariffs. Now, given these mainstream economists who feared tariffs more than chlamydia, back then they were predicting tariff-induced Armageddon, with nearly 50-50 odds of a recession this year and growth plunging to just 0.8%, which is barely above population growth. Now, back then, they pegged inflation rising to nearly 4% from tariffs and unemployment rising to almost 5%. Now, 3 months into the great tariff war, and with no inflation in sight, they are climbing off the ledge. Their recession odds are back down to 1 in 3, which is below what they predicted this time last year under Joe Biden. For comparison, prediction market Kalshi recession odds went from 61% in April to just 19%, which is also lower than under Biden. The economists bumped up GDP and job forecasts, although they're still pessimistic, so just over 1% on the year. This is because they're counting mass deportations and government layoffs, which mechanically subtract from GDP, but of course make us richer. In other words, 1% GDP growth with deportations and defunding U.S. aid might be worth 2+ in normal times. Most important, the economists slashed their inflation forecast to 3%, now saying tariffs will contribute just 0.7% to inflation. Now, 0.7% from tariffs is not the Armageddon we were promised, and keep in mind these are mainstream economists. So what changed since April? Beyond the lack of tariff inflation, Trump turned in much stronger job growth than the mainstreamers expected, averaging 150,000 per month since he took office. That's enough to take unemployment down to 4.1%, which beats 85% of unemployment rates since 1980. Meanwhile, unemployment claims have been tame despite hundreds of thousands of federal reductions. The New York Times pegs it at 285,000. Pair that with wage growth that just hit a 60-year high as American workers replace illegals, and it is driving a recovery in consumer confidence and business confidence that should drive both spending and investment. So what's next? Brought to you by I Trust Capital. The trends right now lean towards faster growth, the investment boom from foreign companies trying to get inside Trump's big, beautiful tariff umbrella, along with mass deportations and government layoffs that swap unproductive workers for productive ones. The biggest wild card is inflation. If tariffs start showing up in the numbers, which they could, especially in the month just ended, that will keep interest rates high, which strangles growth. On the other hand, if foreigners keep eating tariffs or Made in America starts replacing imports, the Fed could bend to the increasing chorus from Trump and now mainstreamers that rates are too high, at which point the risk to watch becomes a Fed that cuts too much, like it's done for 112 years. That would lead to a pleasing tissue fire boom in the near term, maybe even enough for Trump to keep the House in next year's midterm elections, but it also plants the seed of the next boom-bust cycle that could pop in 28 or 29. Okay, we'll be watching. See you next time.